All right, so talking about gold and what we're doing. So I said that as one of my scenarios, I wanted to see that rejection from value high area. Well, on a 30-minute chart, because that's the one that we use for basic decisions, there's a bullish engulfing. The price did go to probe the value area, but it was invalid when it came to the close of how deep it closed inside it and how it did it. If you see these buying wicks, that doesn't really give me too much confidence. This is a genuine value acceptance, especially knowing that we may have that fresh rejection of a weekly demand. So now I just got involved in a long trade as per one of my scenarios, because partly because of this bullish engulfing, but also if I start to scan down through the time frames, we have these. It's basically a consolidation. It's a consolidating area. There's a slight danger that this will go all the way down to extend the initial balance downwards, in which case I will reverse my position and go the other way. So, you know, that's something that you have to consider as a skilled trader and admit that you are wrong so that you can adjust very quickly. But that sort of a mindset doesn't really work unless you've done these setups like a million times, because if you're doing that and you're not using a systematic decision-making process based on your own statistics that you've done before, all that you're doing is just grasshoppering in and out, in and out, in and out, without really having any sort of a plan, and just being reactive, you know, working out of fear rather than being proactive. So let me just adjust some size of TPOs. So what I want to see is the price closing back inside this initial balance range and then going basically straight through it. So that's the expected behavior. But anytime the price action starts to get a little bit weird around the middle of the initial balance range, that's not the strongest failed auction, because failed auctions are quick setups. You know, they're literally like over and done with in about an hour and a half maybe. So if you have to wait for it for a very long time, it's probably not going to be it. So this is why I'm saying I could be wrong, and I'm fine if I am wrong. I actually just had a crude oil trade that went to 2R. So even if I lose this one, I will still be up like 1 hour on the day. However, I don't plan to keep this until my stop loss gets taken out. Instead, I will be monitoring what happens for basically the end of this hour, and then I'm going to make my decision of whether I'm going to stay in or not. Stop loss placement, it is below, you can see that it's below the round number, and that's something that you should always aim to do. There are detailed guidelines on stop loss placements in my Pro Dev program, and you know, that's like a whole, I think it's a whole hour of me explaining why and how and where. So check that out if you want, if you are a bronze member, silver member, or gold member. Well, if you're a gold member, you've already gotten the stick from me for doing doing trades with subpar stop loss placements. But anyways, that's my trade for now. It's the best that we've got on gold at the moment. Still need that nice follow through. So it just remains to be seen what happens, and just to give it time, really. There's no point like grasshoppering and using my ODA loops to abuse the real-time management. So they're just there to ensure that the trade is not going completely against you. So for now, the price seems to be consolidating, and that's enough for me. All right, let's see what happens. I will check in with you later, maybe, if I still have time. I do have some meetings to get to. But yeah, hopefully I'll be able to do another video and to give you like a rundown of what happened. If not, follow me on Twitter. I always post my live trades and outcomes and how it worked, when I lose a trade, when I win a trade, how much did I win, how much did I lose. So that could be a very useful source of educational support as well. I'll check in with you a bit later.